Hey everyone, welcome back to Lunch at the Market. Today's markets are getting whacked pretty hard. So maybe our call to sell absolutely everything last Tuesday wasn't as bad as it seemed on Wednesday when the market rallied 100 points. Wednesday was probably a better call than Tuesday because then we would have got out at the recent highs. Anyway, there's no use crying over spilt milk. You ever spill milk? I mean, it's kind of unfortunate. It's not like spilling water, right? If you spill water, you just turn on the tap and get more of it. But if you spill milk for some reason, it's kind of upsetting. At least that's how the saying goes. All right, so there's simply just too many headwinds in terms of macro events for the market to really rally from here and really for the next month. We continue to believe that as long as there's an absence of corporate data, which we won't see again until companies start reporting in July when we see the next quarters of earnings, then there's really not a lot to be excited about, except because we raised so much cash last Tuesday, we now get to be opportunistic on days like today when the market's down big. So we have two trades for you today. What are they? Let's get to them. Parker-Hannifin. All the industrials, Eaton, ETN, CMI, Cummins, EMR, which is Emerson Electric, all of these guys have gone absolutely whooped, and Parker-Hannifin, symbol PH, is no exception to the rule. It's got a trailing PE of around 14.17 and a forward PE of only 11.31. That's right, 11.31. Clearly, that market multiple of around 14.17 is where the stock should trade, but earnings are improving and have been improving for the entire industrial space ever since the bottom in March of 2009. So what's the play? You're not buying the company for the massive growth, but you are buying the company for the massive cash. They've got over $1 billion in cash sitting on the balance sheet and only 1.67 times cash debt on the balance sheet, right? So it's not quite 1-to-1, but it's 1 to 1.67. That is incredibly unlevered balance sheet, which we like to see. We like a healthy balance sheet. What's even better, over $822 million in free cash flow annually. That's right. If they felt like being debt-free, yeah, it's only a matter of time before Parker-Hannifin has absolutely no debt on the balance sheet, and that's only if it's appropriate. Remember, companies like Google and IBM have been opportunistic about issuing bonds in this environment because the rates are ridiculously low. And when you can borrow money at 2% for a long period of time, whatever projects you can do internally to generate return on investment, return on equity, right, internal rates of return, yeah, it's hard to say that you can't come up with a project that yields better than 2%. So you always borrow money because A, it gives you lower taxes, right? Because you get to subtract your tax rate from the interest rate that you're paying on the debt, right, that you finance. And then B, if you can do a project for a better rate of return internally than you're paying for the money that you get to borrow, then it makes sense that you do that because it gives you tremendous operating leverage. All right, so all that being sold, that was like Finance 101 or more like Finance 315 or even Finance 410 for you right there. So what's the trade? Of course, it's the August in the money 75.80 call spread. You get to pick that up for about $3.70. What does that mean, folks? You should be with us on this one. It's a $5 wide spread. You subtract 320, you make 180. Oh, sorry, you subtract 370, you make 130. That's good for a 35% rate of return in just over 90 days. Your break even, you only need Parker-Hannifin to be at around $78.70 to break even. That is $5.50 lower from where the stock trades right now. Not a bad risk reward, considering that this stock was at $100 a share a couple weeks ago. That's right, 100. And now we're getting a 75.80 in the money call spread. Our year-end target for the S&P 500 index is 1,377, which is about 60 points from where we're at right now. Again, as long as we get earnings continue to come in line, we get some resolve of some of these macro issues. I do find it that the Greek situation, the Italian situation, the Ireland situation, all the pig countries are going to be resolved by the year end. We should have some clarity on terms of where the euro stands, and we should probably actually have oil higher by the end of the year as things pick up after we come out of the summer months. So again, we want to get to July earnings season. We want to be careful about what we do between here and there. We want to keep tons of cash in your portfolio to be opportunistic on days like today. If you get a huge rip, you want to sell them and raise the cash because it's just better to have it and be defensive for right now. Okay? The other trade is IBM. Look, Almost no company has better visibility in its earnings than IBM. IBM is taking a look at $15 in earnings for fiscal year 2012. If you put a 10 multiple on it, the stock is almost there right now. A realistic multiple like a 14 for an IBM, which is a terrific company, has been growing earnings at a ridiculous rate, gets you to a $210 in the stock. The stock trades at around 167 right here, and there are a lot of very smart people buying IBM right here. So we're going to jump on the same side as people like Stutland Equities, who put out a report on IBM the other day. That's Brian Stutland, who you get to see on Fast Money and on Options Action. And then there's Jim Cramer, who's buying it for ActionAlertsPlus.com, his charitable trust, and he's been telling you that the whole time. He's been telegraphing you that move on Mad Money. So we're going to add our bet to theirs. This is going to be the October 160, 165 in the money call spread. This time it's only 320. Obviously, max gain is 180. By October expiration, you're talking about a gain of 56.25%. You know what? That's not really that bad between here and the end of the year. I would take a 50% rate of return if I were you. We're certainly going to shoot for it, and we'd be happy to get it as well. All right, so your break even is $163.20. You don't have as big a cushion in this trade as you do in the Parker-Hannifin, but it's a stock with a cleaner story. IBM is loved by a lot of people. It's really still under everyone's radar. It's kind of a slow grind up. People are they've kind of missed the move ever since the bottom, and there should be tons more move to the upside. As long as IBM gets a market multiple and it hits its earning numbers, then you're going to see the stock above $200 a share. In fact, a lot of people's price targets on IBM are for $200 a share. We don't need to get that whole move. We just need to get our piece, our 55% or so. So again, keep in mind 1377 is our year-end target, 60 points higher than here. The summer's going to be really rough. We could see 1300 before we see 1330 or 1350. So be careful, keep your powder dry, just kind of start picking away at the positions that you want to have for the end of the year. Thanks for joining us again on Lunch at the Market, and we will see you tomorrow.